You're watching Millionaire Economics, and today we are discussing the top 5 best assets to invest globally. Before we continue, take a moment to like this video and subscribe to the channel. As always, these ideas are not financial advice, and you must do your own research before investing in anything. So, let's begin. Number 5. Stock market. A share of ownership in a corporation is denoted by a stock's ticker symbol. While the potential return on your investment could be the largest with stocks, the level of risk to which your money would be exposed was also the highest. These words of caution are not intended to frighten you away from investing in stocks. Instead, they are designed to point you in the right direction of the diversification that can be obtained by the purchase of a collection of companies through mutual funds as opposed to buying individual stocks. Investors that are willing to assume a little higher level of risk and have a portfolio that is properly diversified. Because of the high degree of volatility that is associated with individual stocks, one sound piece of advice for investors is to restrict their holdings of particular stocks to no more than 10% of their total portfolio. Using an online broker is the most convenient approach to purchasing stocks. After you have opened and funded a brokerage account, you'll be able to select the order type of your choice and officially become a shareholder. Bonds. Although bonds are generally considered to be less hazardous than stocks, this does not mean that investors who purchase bonds are immune to the possibility of experiencing financial loss. Mutual funds. Mutual funds provide investors with the opportunity to diversify their holdings and have access to a wider range of investments than an individual investor could reasonably afford to purchase. When you invest with a group, you can take advantage of economies of scale. The investor's assets are helped to expand by the monthly contributions. Because they are typically less subject to price swings, funds have a greater capacity for liquid trading. ETF. Expense ratios of ETFs, which are often passively managed, are significantly lower compared to those of actively managed funds, which are the norm for mutual funds. What factors contribute to an increase in the expense ratio of a mutual fund? Expenses such as a management fee, shareholder accounting costs at the fund level, service fees such as marketing, load fees for selling and distribution, and payment to a board of directors are all examples of these types of costs. Number 4. Real estate. If you are ready to manage your own properties as an investor, rental property can be a very lucrative business opportunity. If you choose to go this route, you will need to choose an appropriate piece of real estate, arrange financing for its purchase or pay cash for it, manage its tenants, and do maintenance on the building. If you make astute acquisitions, you have the potential to do extremely well for yourself. Long-term investors who want to manage their own properties and produce consistent cash flow can benefit from purchasing rental homes as an investment opportunity. It may still be a good moment to finance the acquisition of a new property, despite the fact that mortgage rates have been increasing higher. However, the uncertain economy may make it more difficult to actually run the property. If you keep your investments for a long period of time, steadily reduce the amount of debt you owe, and increase the amount of rent you collect, you will likely have a healthy cash flow when it comes time to retire. To discover a home that is available for rent, you'll probably need to engage with a real estate broker. Alternatively, you can work on expanding your network in the hopes of being able to find better offers before they become available on the market. Number 3. Crypto. A cryptocurrency is a form of decentralized digital currency that can only be transferred digitally and is designed to function as a means of exchange. The past few years, in particular, have seen a flood of funds into the asset, which has caused prices to rise and drawn even more investors into the activity. As a result, it has become hot property. Investors who are willing to accept the possibility that their cryptocurrency investment will be lost entirely in exchange for the possibility of substantially larger returns should consider purchasing cryptocurrency. Bitcoin. Bitcoin is the cryptocurrency that is available to the largest number of people, and the fact that its price moves around a lot attracts a lot of traders. For instance, the price of one Bitcoin at the beginning of 2020 was less than $10,000, but by the beginning of 2021, it had risen to over $30,000. After then, it increased by a factor of 2 above the milestone of $60,000 before taking a huge step back this year. Altcoins. With the exception of stablecoins, most altcoins are characterized by a larger potential for both loss and gain when held as an investment in the cryptocurrency market. Bitcoin is the most valuable cryptocurrency, despite the fact that its price is highly unpredictable because it is currently the market leader. Alternative cryptocurrencies have more room to expand. Number 2, cash. Saving account. An online high-yield savings account that gives you interest on your cash amount is an option for you to consider. And similarly to a savings account yielding pennies at your brick-and-mortar bank, high-yield interest savings account are vehicles for your money that you can easily access. Those who will have a pressing need for cash in the not-too-distant future may consider opening a savings account. When an investor is risk-averse and wants to prevent the possibility that they won't get their money back, a high-yield savings account is a good option for them to consider. Certificate of Deposit. Certificates of deposit, also known as CDs, are financial instruments that are issued by financial institutions. In comparison to a savings account, CDs typically carry a greater interest rate. And if you think interest rates will go up in the near future, a certificate of deposit with a shorter term could be a better choice for you because it will enable you to reinvest the money at a greater rate once the CD has matured. For retirees who don't need an instant income and are able to lock up their money for a little bit, certificates of deposit can be a suitable alternative because of the safety they offer and the larger rewards they provide. A certificate of deposit is a type of investment that is suitable for investors who prefer to minimize their exposure to risk. This type of investment is particularly useful for investors who anticipate having a definite need for cash and who are willing to sacrifice some of their potential return in exchange for the ability to lock up their funds for a longer period of time in exchange for a slightly higher rate. Money market. The term money market refers to a specific type of financial market in which only very short-term debt instruments can be exchanged. Money market is used for trading short-term financial instruments as well as transactions involving wholesale deposits and loans for a limited period of time. The central bank and the government are the two primary players in the money market. You are willing to take on a little bit more market risk with money that you may need in the near future. In addition, investors who put a percentage of their portfolios in money market funds since they are a more secure investment option than stocks. Number 1. Yourself and your own business. Taking the plunge to launch one's own company requires a certain amount of faith. To succeed, you will need to step outside of your comfort zone and experiment with new things. Why wait around if you're interested in that concept? You've reached a point where you're prepared to launch your own business and serve as a CEO. The amount of labor involved is considerable and there is an element of danger involved, but the potential for rewards is enormous. Finding the drive to perform your work to the best of your abilities while you are employed by someone else might be challenging. No matter how hard you work, the owners of the company will always receive the majority of the benefits of the business. When you are your own employer, you'll have the ability to discover daily inspiration in your work. It's an exhilarating experience and it puts you in charge of your own success if you follow your dreams. Because you are responsible for the day-to-day operations of your company, you will feel an intense amount of pressure to pack as much work into each day as you possibly can. The knowledge that your own perseverance and initiative will contribute to the success and reaping the rewards will keep the fire in your belly burning so that you may make the most of each day. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.